What's going on, guys? I am going to retire early. You know how I'm going to do it? I'm going to stop using US dollars. US dollars. Since 1913, it's lost 90-something% of its value. If you're trying to get rich holding US currency or any fiat currency, you're not going to do it. You can try to expand your income, but if you're anything like me, you can only expand your income so much unless you hustle, second job, third job, whatever. You're not going to get ahead. So even if you have the hope of retiring in today's day and age, you can't use fiat currencies. Now, what do the rich get richer? All right, let me slow down. All right, I'm getting kind of ahead of myself. So there's two forms of economic thought, right? There's Keynesian economics, where it's inflationary, right? Everything expands. It's a leveraged debt-based system. And then there's Austrian economics, where you have the foundational stones, or basically the denominator, as a finite amount where it doesn't change. It's not leverage, it's not expanding. It's the natural state is deflationary, right? So if you have a set number of units and the number of goods and services increases, the value or the amount of unit required for each good and service decrease over time. So it actually rewards the saver, rewards you for holding on to these units of measurement. We are not in Austrian economics. We are in Keynesian economics, right? That's how our debt-based fiat currency system works, right? And since 1913, since the creation of the Federal Reserve, we've printed ourselves into oblivion, and now the dollar has lost 90-something% of its value. I think I already said it. So if you're trying to retire early using that's not going to work, right? And so when you look at stocks, the S&P, wow, it historically returns 10% a year. Okay, but factor in inflation, not the stupid CPI, what they tell you, 2-3%, what they shoot for. And noted, the 2-3% is to keep the Keynesian economics working, right? If we don't have inflation, we're stagnant. There's no continuation, right? There's a stall, there's a relapse, there's a collapse, there's a recession. And that's why they shoot for a minimum, or basically a target inflation of 2 to 3%. So 2 to 3% yearly, your money or your value, your wealth is being inflated away, because they're going to print currency to keep the ball rolling, kick the debt can down the road. So what do? You denominate your wealth in something that cannot be printed away. That's what the rich do, right? So the rich get richer, the poor get poorer, because the poor are the wage earners that don't have any wiggle room between bills and basically investments that hold value. But the rich have surplus of assets, so they can go out and buy that sports team for $100 million. Guess what? 10 years later, that $100 million sports team becomes $1 billion because of inflation, plus, just increased value in things, because they inflated the denominator. So then your amount, so what you pay today is what you pay more of. So like housing, you pay $100,000 for a house in 1990s, and now that house is worth $500,000, $600,000. I keep mistaking because I keep getting ahead of myself. I'm just passionate about this, guys, that you cannot retire early, if at all, because Social Security is going to go insolvent in 2043 or something. Basically, what the payouts are and what reserves they have is going to be insolvent by a certain point, where the current payouts are more than what's being brought in. So they're basically taking off the top of what's stored, and what's stored is only going to last another decade or so. And then what's going to be paid out is less than what's coming in. So then you're going to have cuts in social service. You're going to have cuts to Social Security because of necessity. Like there's nothing to pull it from. So if you're trying to rely on Social Security for your retirement, it's not going to work. So you got to put it in your own hands. Company match 401k. That's good. That's something. But if you want to retire early, you got to put money into something that's going to beat inflation, right? Beat the goalpost, because the goalpost, so let's say there's this many units, they're going to print more, and so everything costs that much more to buy, to purchase, to live. And that's why everyone's struggling right now. And so enter Bitcoin, right? If you don't know about Bitcoin, Bitcoin is basically a protocol, right? A protocol is basically a software term. I'm not an IT guy. I'm just telling you what I know, and what has got me sold on Bitcoin is the fact that the internet, basically everything that the internet is built on, is a protocol, right? So basically people put a URL in and it takes you to a website, and that's all built on an internet protocol. Basically, it's the way software, and you can produce things, make things on it, and it's set, there's a list of rules and expectations, and that's basically the protocol. Bitcoin is a monetary software protocol, right? And there's so many interwoven webs in between that protocol that allow it to be very secure. And what it is basically a finite amount of units of measurement of an asset, of a currency, of a store of value. Basically, it was a peer-to-peer, basically kind of like the Venmo or a WhatsApp type deal, where you can transfer money or a unit of measurement, or hey, I give you something, you give me something, like a barter tool. But what it's now become is a commodity, right? Just like livestock or oil, like or gold. There's something where there's a finite amount and it's protected. There's no a lot of physical risks that come with real estate. Hurricane blows through, tornado, those are all physical risks. Bitcoin does not have that, right? It's like the internet. The internet has you can't shut down the internet unless you're a full freaking government. And yeah, you could shut down certain websites or certain things on the internet, but Bitcoin, it is so decentralized in the fact of nodes and basically the individual computers running it, that nothing can stop this thing. There's $1 trillion of value in this thing, right? 10 years ago, when the thing was getting off the ramp, there's a lot of risk because it could have went to zero. But now we're up of $1 trillion market cap for the Bitcoin as a whole. And Michael Saylor is basically a strong advocate. If you don't know who he is, look him up. He's awesome. He's basically said if Bitcoin's not going to zero, it's going to $1 million. And if it goes to $1 million, it's going to $10 million. And if it's going to $10 million, it's going everywhere. There's no better asset or store of value than Bitcoin, right? There's no risk except it goes to zero. But it's like, as far as a commodity, there's no risk. You buy a herd of cows, they die, wolf gets them. You're crap out of luck. Housing market, like supply shock, like people make more houses, the building thing, or Austin, Texas, where you build a house, but they're out building houses, so houses are actually decreasing in value. So it's like there's a lot of risk with other assets. Bitcoin, I do not see any other risk towards Bitcoin, and because of the finite amount, there's so much upside to where there's 21 million of these things ever. That's the protocol. It can't be changed. It can't, there's nothing that's going to change that. 21 million ever in existence, period. So if every millionaire wants one of these, they can't. There's not enough of them. So if you even get a piece of Bitcoin, even a little bit, even if you dive into, dip your toes in, or basically anything, you're going to win. And so retiring early. Let me put this into perspective. Michael Saylor, amazing guy. Look him up. He's got tons of podcasts he's gone on. He's very well known, very bullish Bitcoin advocate, right? He's basically an amazing smart guy who basically built a multi-billion-dollar public company, MicroStrategy, which was later rebranded as Strategy, ticker symbol MSTR. He basically took the balance sheet or the excess funds that they had, and instead of holding cash that bled basically inflation, where they inflate the value of the dollar so it's worth nothing, he put into Bitcoin. And basically but his analysis, everything, where his base case, not bullish, not bearish, base case, He thinks that Bitcoin is going to return 21% over the next 21 years. Now, if you're a math genius, S&P's historical returns have been 10% year over year. Now, Bitcoin, and it's not like, oh, it doubled 21%. No, compound interest, right? Compound growth, that 20% isn't a linear thing. So 10% compounded over is still a hockey stick, right? It's compound interest. At 21%, now you're getting into generational wealth. Even with like minimum wage, just putting $50 a month towards like an account towards Bitcoin, towards retirement into Bitcoin. Like Fidelity has these things. Depends on the state you're in, but you can put Bitcoin into a Roth IRA, $50 a month. Like, dude, this thing's going to millions. So you're gonna have $1 million, granted, $1 million denominated in US dollars, but an asset that's gonna keep appreciating beyond the hurdle rate, beyond the inflation, because inflation, you have to beat inflation, because if you don't, you're losing money, right? You're losing purchasing power. So you have to buy something that outpaces the inflation. Enter Bitcoin, 21% base case. He's so confident in this that his company's offering a preferred stock, which means basically it's higher on the capital stack. So like if it goes out of business, you're going to get it paid out first, so it's safer for investors. This is one of the safest stocks you can buy in the stock market, and he's offering us 11.5% yield, basically a rate. So you hold a share of this STR, that's the ticker symbol, and he pays you 11.5% a year. Now that's 1.5% better than S&P historical returns, and that's guaranteed. Like, this is a perpetual guaranteed stock where, like, some dividend stocks, they can stop the dividends at any time, or they can pause them and then they don't pay anything and then they pick them up again. This thing, if they miss a dividend payment, it's cumulative. So if they miss a payment, then the next payment they have to pay you 2 installments of the 11.5 annualized yield. So just with STRC, let me get this straight. So the typical retirement advice is 4% rule. So basically you have a nest egg that's grown, and then you sell off enough shares, or basically 4% of your stack or your stock portfolio a year to live off of. Now 4%, 50,000, and then you need 2.5 million living on 50,000. Now you can correct my numbers, I'm just off the top of my head. So STRC 11.5, you could potentially have only $500,000. Well, 10%, yeah, so $500,000, and you get paid at a 10% yield, right? 10%, not the 11.5, 10%. You can retire with $50,000 a year with only $500,000. So you can retire with $500,000 instead of the $2.5 million. This man has solved the retirement crisis. All you need is $500,000 to retire with $50,000. Not only that, he's structured the payouts or the dividends of this stock or this preferred stock to be a return of capital dividend. So it's not from earnings that you get, so you have to pay tax on it. For the first 10 years, it's tax-free because it's a return of capital. So you gave him $100 for a share of STRC, and he pays you 10% a year because you bought it. Or he pays you 10% a year for your $100. So he gives you $10 back every year. But the way he's doing it, he's taking your $100 and he's buying Bitcoin, and it's going up 21%, and then he's paying you 11. So he's basically pocketing that 10%. That's what his company's doing. But I lost my train of thought. Help me out, guys. Help me out. So, crap, I lost my thought. Why is it not coming? STRC, 500,000, 10% a year, 50,000. Oh yeah, so you buy a share of STRC, $100. He pays you $10 a year to hold it. Now that's a return of capital. He's not giving you earnings from the company. He's giving you 10 of your original dollars back. So now he only owes you 90 back, and you have 10. So it's a return of capital. You don't owe any taxes on that dividend. So for those first 10 years, you pay no taxes because those 10 years, so $10 he gives you back, then you're at 90. Your cost basis goes down. So then, hang on, this guy wants me to get out of the way. So, does that make sense? So you're basically taking your yield down, or your cost basis down to every year. So basically you're at $100, then you're at 90 at the end of the first year. Then the next year you're to 80. And then basically at the end of the 10 years when your cost basis is zero, that's when you start paying taxes on the returns because it's at zero. And then basically any once you sell, you pay tax on that because you've got all your money back. Anyway, so that's needless to say, you're not paying anything for the first 10 years in taxes because it's all a return of your own money. So this man, so Michael Saylor, look him up, dudes. Like, seriously, look him up. Look into Bitcoin because I'm telling you, Bitcoin is the way to retire early. I mean, you don't even have to hold Bitcoin if you don't want to. You can hold a secured preferred stock from a multi-billion-dollar company, it's collateralized, I think, by, I can't remember the number off the top of my head, but it's over-collateralized by 10 to 1. Like, it's insanely over-collateralized versus any other dividend stock versus anything else. Like STRC, look into it. Look it up, dudes. Like, you can look at STRC.live and see it at a live standpoint on basically its collateralization, its price, its ratios, or you can look up strategy.com and look up analytics and look at STRC, and it has everything posted on their company's website. Or you can just hold Bitcoin, dude. Like I said, Roth IRAs in a lot of different states let you hold Bitcoin in self-custody, or not self-custody, but basically through a brokerage. You can basically buy it through your brokerage into your own retirement account where it's protected. Or you can self-custody. You can buy yourself a wall in self-custody. I have a little bit in self-custody. I have a cold storage drive that I have with some Bitcoin on it. But mainly I'm invested in equities like MSTR. And then I did have some in spot Bitcoin ETF. So basically it's an electronic fund that basically buys Bitcoin. You give them money and you buy a share of this fund. And then what they do with the fund is they buy Bitcoin, right? And then there's an expense ratio. They take like 0.05% depending on which one you get, like IBIT or FBTC. The thing I don't like about it is just I don't know what they're doing with it, or if they're basically making derivatives off of it. And so I just like self-custody, or I like an equity of like a Bitcoin treasury company that self-custodies their own Bitcoin. So that's what I personally do. Not like everything I say here is not financial advice. It's financial entertainment. But what I'm saying, guys, is if you want to retire early, Bitcoin is the way, right? It's not some real estate course or some side hustle. I mean, granted, do everything you can to buy more Bitcoin, to get more STRC, but literally, guys, STRC, $500,000, 10% dividends. It's at an 11.5 dividend right now, but 10% dividend, what it was, and, well, because it's set at $100 par. So basically, if there's a bigger demand and it goes up in value, they basically make more shares of it to bring it down to $100. And then if there's less of a demand where it goes down below $100, he raised the yield, because then it incentivizes more people to buy it because he raised the yield. So it's at 11.5% rate right now. So conservative 10%, what it's set at. And $50,000, okay, $1 million, you want to retire with $100,000? Oh, you only have to get $1 million to retire with $100,000. It's freaking amazing, dude. Like, seriously, look at it. Yeah, appreciate your time, guys. I'm just spitballing here. It's from the hip. So if you enjoy this content, subscribe, hit the like button. Let me know what you want to watch next, and appreciate your time. Take care.